Hey everybody, it's Pete. Good morning. Thank you so much for joining me today on Stocks for Breakfast. It's Monday, December 6th, 2021. Today's video, we're actually going to make a list of stocks to trade. We're going to give you a bunch of ideas, but the biggest thing is, do we meet the criteria for starting to build positions versus do we have a shorter time frame where we're lowering our position size, trading for a little bit more cash flow? The biggest thing I want to talk about here, which is a lot of our conversations here, which are, if everybody understands the push and the pause, right? We spend a lot of time discussing that, where the push is where we make our money. During the pause is where we consider, are we adding to the trade because conditions are perfect, or are we exiting during the push and into the pause because the conditions are less than perfect? And right now, I'm a little bit more into the exiting into the pause, simply because the price action is a little bit broken right now as far as the obvious side of the market. So raise your hand if you look back on the charts now and wish that we had that straight up every day. I was telling everybody that it was a glorious time to be in the market. I was telling everybody that it's critical to be understanding and sticking to your stop loss. We actually had a swing trade strategy session last night, and quite a few people who are new into the community admitted that they don't trade with stop losses, and they're feeling the pain right now. So if you're watching this video right now, the single biggest thing to make it easier to trade with stop losses is to accept the dollar amount risk prior to the trade. That's the big thing, because if it goes down to that level and you get out, it's easier to do because you accepted the possibility of a loss prior to the trade, which is a part of trading. All right. So in today's video, we're going to go through a gamut of reading the market, reading the sectors, and then diving into a bunch of potential ideas, at least what I have heading into Monday. And then if you join us every day, you know that we keep updating the list as the week unfolds. All right. So stick around. I'll be back in just 1 second. All right, so thank you everybody for joining me today. Obviously, everything that we discuss here is for educational purposes. It's up to you to make that final decision. It's my mission to help you make better decisions, and hopefully we're doing that. I just want to highlight something that John A. actually posted in here before. This is actually, I agree with this, and it's mostly the part about no trades until we get bullish on the overall markets. I'm not sure I could have actually said it better than that, John. When we take a look at the big picture of the market and we're actually looking at where we are, it's not obvious. And we actually break this down even further when we start to look at the bigger picture of the ETFs. And it's very hard right now to find something that is screaming to be long. It's very hard right now to find something where there's absolute conviction. It does not mean that there aren't ideas. There's definitely ideas. So, for example, Pfizer is one of the ideas we're going to talk about today. As far as stocks that are, we call holding the bid. This is one of the few. There's a couple of other healthcare stocks we're going to talk about today. We're going to go right into energy stocks that are not quite perfect, but kind of not selling off as hard as some of the rest of the market. But we actually want to start talking about Rivian today. It's obviously an IPO. Obviously, the stock doesn't have that much price history, but there's a lot of good buzz around this stock today. And if you remember when the IPO first came out, we actually mentioned that the model that they have is very different. And it reminds me very much of Microsoft back in the day, where Microsoft opened up their software for everybody to write programs for it to improve. Versus what Apple did, and Apple did not do that. And Apple struggled. It almost went out of business until Microsoft actually gave them a loan. So Rivian, if you don't know, has what they call surfboard technology, which is basically means their chassis is going to be available for other people to put their car on top of that. So I really think that Rivian is something very different than some of the other electric vehicle cars out there. So we're just going to do a quick rundown on Rivian's charts, and it's RIVN, just in case you weren't aware of it. Now, it's trading near the IPO lows, which I think a lot of the market is actually selling off pretty hard. So we've been talking about Rivian. We've been talking about XPEV and NIO and those Chinese stocks in general, never mind the Chinese electric vehicle stocks. There's a grip on them right now from their government, and they're a little bit more challenging, so to speak, than just trading let's just call it a regular stock that doesn't have that dark cloud over it. So Rivian, in my opinion, and the way I'm looking at it right now, I think they have a different story. They don't quite have a different catalyst yet where we're starting to see the stock rally, except for when the IPO came out, which was very, very strong. Now that we've pulled back, we're actually looking now for what we call accumulation, which is as we push down, the best case scenario for Rivian right now to kind of get involved with it is I want to see the push down exactly like we have here, but now I want to see it go sideways for maybe a week or two on heavier volume, which essentially means that's what we call accumulation, which is smart money trying to buy the stock as quietly as possible. So if we see that, that's the price action I'm going to be looking for in Rivian. But I want to jump right over into, because everybody's coming here to these videos wanting to get stock picks every day, and I want to make sure that I hit that first. We are going to talk today about position sizing. We are going to talk today about the type of price action that we need to see. And if we could just go over to the weekly charts and talk about what would dictate that we start to increase our position size, what would dictate that we would start to build positions. So in other words, the push and the pause, and during that pause, we're looking for a bigger move and we would add more shares. We need the current price action to change. Here's the biggest thing I want to talk about, and this has been a very, very big part of our conversation in the private community, in the boot camp, and that's how often we are trading. We actually had a couple of newer members who are on the swing trade tracker side of things with us, asking why we aren't trading more aggressively over the last 2 weeks. And I'm not really sure what those people are looking at. The market has had heavy selling, and even if you don't quantify it as heavy selling, it certainly, absolutely has not been obviously bullish. So the big longer term picture is definitely bullish. However, my goal with these videos is I want to try and give you the experience that I've had where understanding the long-term picture, understanding the big picture for your trading account means that we choose to take risk. If we're being smart, we choose to take risk when there's a high likelihood of your profit target being hit, when there's a high likelihood of the stock moving in your favor and hitting your profit target versus your stop loss. And I think over the last 2 weeks, it'd be very difficult right now for somebody to build a great argument that it was really obvious. It wasn't. The Omicron variant, depending on where you're talking to or who you're talking to right now, everybody's saying the same thing, is that it's a milder variant. And now it's a question of whether or not we're kind of overreacting to the other side. And anytime new conversations come out about it, are we seeing too much selling? Are we seeing an overreaction to the downside where now we should or could be looking for ideas? I actually think that the variant at this point, while it's news, I do believe we're on the other side of that. And I think really what the market's reacting to right now is the fear of higher interest rates. I don't know that there's any other story right now that's going to matter more. We have the Fed meeting coming up in 9 days where they're going to make a new announcement. And I think that's the one that the market is actually really reacting to right now, because let's face it, we've had variant sell-offs before, and most of them have been hit and then gone right back up within a very short period of time. This one did not do that. We've had 2 weeks of selling, and the selling, if you look at the charts, the volume was pretty high, which means that there's weaker variant but continued heavy selling. I'm telling you right now, the market is selling on fear of rising interest rates. There's not even a question about that. So game planning and scanning headlines, what should you be looking for right now? Conversations around interest rates, and also what stocks will benefit from higher interest rates. You start to work your way over into financial instruments where the banks, which really haven't done that much, and the XLF, which hasn't really done that much, is something to actually keep an eye on if and when those conversations start to become a bigger part of the conversation. I actually want to talk about this because this is actually, Nathan is actually asking about CFVI, and this is something that newer members of the community need to learn. And Nathan, I'm assuming this is the symbol that you're talking about right now. If you look at the symbol, it has traded on Thursday of last week. It traded 98 million shares, 47 million shares on Friday. prior to that, the stock was trading 25,000 shares for the day. So the conversation I want to bring around this is, I'm not going to comment on this because this is not a stock that I would normally trade. It's not a stock that I would teach people to trade. It's not a stock that I would call out in our community. The way that we trade and the way that all classic trading people have traded over history, and prop traders and professional traders, is we are normally looking for market leaders and then trading those market leaders as long as that industry or group is in play. Stocks like this are not something where, generally speaking, again, I'm not saying you can't make money in a stock like this. What I'm saying is it's very hard to predictably see profits in stocks like this. So Nathan, I understand why you want it called out. I understand that the stock is exploding over the last couple of days, but I'm not going to call it out because it's not something I normally trade. And I hope that I can give that piece of trading insight to people that are watching these videos for the first time. You have to ask yourself, do you want to bet on a lottery ticket or do you want to bet on yourself? There's a big difference between the two. And if you understand the stock market power pyramid as we teach it, which is at the bottom, there is the market, which is the SPY, the NASDAQ, and the Dow. Above that is the sectors. Above that's industry groups. And then above that is individual stocks. And the part that I think that gets a little bit under discussed, I don't know if that's a word, is when we're talking about even the very top of that pyramid, the stocks, we're still talking about stocks that are market leaders or stocks that are in leading industries. A stock that on Wednesday that barely traded and then traded incredible volume on Thursday and Friday is not a stock that's predictable. It's not a stock that has consistent institutional attention. So if you're a regular viewer of these channels, you know that a lot of what we talk about is order flow and tape reading, but we're going to stick with order flow right now. To give the question of what order flow means is, the order flow means that it's reliable and consistent daily attention by the smart money. So that means that there's liquidity in that stock. That means that there's average daily volume in that stock. That means that there's money being allocated to that stock on a regular basis. Now, if you really think about why we choose to take risk on ideas, is because if we take and buy shares, we're expecting the regular buying and selling pressure in that stock, and especially the buying pressure, to move in our favor. That's really what we're relying on. That's the upside of the trade. What a lot of people don't consider is the downside of the trade and how that liquidity factors into why we should feel okay with taking risk, because it means that we can get out at a reasonable spot. So if a stock like this goes from $8 to $14 in 2 days like that on heavy volume, and you get some size, which is possible on a $14 stock, and that liquidity dries up and there's nobody at each level, and you try and get out of that, what could be a very profitable position with a lot of share size turn into a pretty big losing trade because you can't get out. There's no other way to put it. You market out of that stock, or you get out of that stock however you normally would. If there's nobody at each level because the stock then starts to trade as it normally does, that's a very tough way to be consistent. If you're like me, you want reliability, you want predictability, you want to have conviction where you expect to see follow through. And these kind of stocks, that's very hard to do. So we're going to hop on over into, I want to talk about John A and John B, actually, talking about Zillow this morning and getting into some of the ideas. One of the main scans that we run every day, and we teach everybody in the boot camp to run every day, is stocks with 2 times normal volume. Best case scenario, the stocks are also above at least the 50-period moving average. You can see here Zillow is a longer-term move to the downside. They've had a lot of problems over the last 18 months, specifically over the last year, where they got into the home flipping business and they decided that that wasn't their business model. And they kind of announced that heading into last earnings. And now they're divesting themselves of all those properties. It might need to be in one more quarter. And let me actually zoom this out just a little bit more, where this price action needs to play itself out. But if you remember what we just said before about increasing volume during a move sideways, we're starting to see that a little bit here in Zillow. So I'm not looking to buy Zillow yet, but what I want to try and do is start to train you to see what you should be spotting. So this is a trade that would actually be going into our tracking journal, not necessarily our trading game plan yet. So the higher volume in the context of this bearish order flow is interesting, but for me, it's not a trade yet, which kind of takes us into the next scenario of which stocks actually do meet the criteria of ideas that I've been looking for today. So we're actually going to go and give you some ideas. So we've already talked about and mentioned Pfizer, and I want to just point out the difference between, you can see a stock like this that is already exhibiting bullish order flow versus a stock like this, which a lot of people are talking about, where there's no bullish order flow. So you have a choice. Again, this is this is kind of where we pretend we're like the eye doctor. Better one, better two, and you need to make an obvious answer, right? So if we go into Peloton, where there's no bullish order flow, but the volume is increasing. Now look at this. Look at the volume during this pause here compared to the volume here. We have expanded dramatically. So it is appearing that there is somebody stepping up in this $42 price range, that they like it a lot more than they liked up here. So this is another stock that's going to be going into the tracking journal, but not yet on the trading game plan. So the question then that comes in is, okay, that's interesting. The stock's going down. It's not something to trade yet, but the tape is changing. What does that need to look like? Well, we outlined this last night on our swing trading review session, which we have every Sunday night, which is essentially whether it's the market or the individual stocks right now, the minimum criteria we need to see is well bid. Now, if you're a regular viewer of our channel, or if you happen to be in the boot camp, you know that well bid means higher highs, higher lows, and closing near the highs. Now, we have not been seeing that on the market. We've been having higher openings, but we've been actually closing below those higher openings. And Friday was actually a bearish engulfing candlestick, which means it completely took out the high and the low of Thursday's price action. So what we're looking for this week, whether it's in your stocks or in your individual sector readings, we need to see this. And it can only start on the daily chart, because right now the weekly charts are well offered for 2 weeks. So if you look at this, and let me zoom this out a little bit here, this is what we're looking for. We need to see higher highs and higher lows, and we need to see it close near the highs. Now, that sounds obvious, right? That sounds obvious, but it's not so obvious to a lot of members that are either here on social media or newer members in the community, because you get a lot of people that just believe every scenario is the same, and it's not. I'll just straight up tell you, I have reduced my share size and reduced my activity by at least half the last 2 weeks. Why? Because I don't want to dig myself a hole. Professional traders trade when there's a significant edge, not simply because the market's open. And if there's anything you learn from me, I hope that is the single biggest thing that you learn from me, because it's easy to make money when it's obvious. What's hard is managing your mindset to pull back when it's less than obvious. But that assumes you understand what obvious is in the first place. So when we get new members coming into the community, as well as here on social media, people asking about, what do you think about this? What do you think about that? And these stocks that are getting absolutely crushed, I need you to write this down, because it's critical. The only reason we choose to accept risk is because there's a good chance we're going to make a profit. Now, all these stocks that are getting hammered, whether it's Roku or Peloton or Zoom, or all these stocks that have been going down for months, buying them simply because they were a higher price not too long ago is not a good idea. The easier trading, the easier way to have conviction, at least the way that we teach it and the way that we do it, is you need to see some signs of life. You need to see somebody with deep pockets stepping up, holding the bid, which is higher lows, and here's the thing, paying higher prices and holding it there for more than one day. Last week on Wednesday and on Friday, both days had higher openings, and neither day did they hold the bid. So this is what's going to separate you from somebody who wakes up like myself every single day and expects to make money when we get follow through, versus somebody who hopes to make money and is crying because you didn't get follow through and they didn't recognize it. So if you want to have absolute conviction in this week, the game plan for this week is we need the daily candlesticks to go well bid. Which, why? What does that mean? It means somebody with deep pockets is finally stepping up and holding higher prices and paying higher prices. So if selling comes in, they're buying it and holding it there. If the selling dries up and they like the next week, the next 2 weeks heading into the Fed announcement, they're also paying higher prices. So I believe the last 2 weeks of selling are more about pricing in the interest rate hike that potentially be coming, the language of what's going to happen during the FOMC announcement versus the severity of the new variant. I believe that's what we're seeing unfolding. We've had a lot of conversations about this. So that's how it's going to translate for me into what I plan to buy. We've also talked about the energy sector. So I'm actually going to give you a few ideas in the energy sector. We're also going to drop down into crypto a little bit. So some of the stocks that were strong just last week in the energy sector, again, we got to zoom out a little bit here to give you an idea. They were breaking out prior to the last couple of weeks of selling, but these are now the stocks that are going to be on my watch list heading into this week. Now, I want this to be as clear as possible because a lot of members who come into the community for the first time, and especially people here on social media who are new to scripting out your trading success, scripting out what you need to see happen, need just like that one little extra layer of explanation, which means if I give a list of stocks right now, these are stocks that meet the criteria. These are stocks that are interesting to me. These are stocks that are showing some signs of bullish order flow or even less bearish order flow than a lot of the ideas. But then I go to read the tape to determine my entries. So these are ideas that are going into my list, but then the market needs to unfold. As I just said, we need the weekly charts, and I'll show you what that is here. We now need the weekly charts to go well bid. Now, the fact that I'm looking at some of these is based on how they traded over the last 5 days, which means the majority of them closed near the high of the week. So that's the minimum criteria. Then we're going to go over to another list of stocks that already meet the criteria that will be in my game plan. So some of these are for the tracking journal, and then we need to see this week unfold. Some of them are in the trading game plan for this week. So if you take nothing else, again, out of what we talk about on these stocks for breakfast videos and which stocks to buy, you need to make that separation between it's interesting but not yet versus it's interesting and now I'm going to look for entries. So I'm going to give you some energy stocks that are in my interesting list that need to show well bid this week. Then we're going to get into a big list of ideas that I am looking to trade today. Okay. So on the energy list, and again, these are stocks that closed stronger on last week. You can see VLO actually closed above the open. CVX, XOM. Those are probably the top 4 or 5 that I'm looking at. Now, we're going to actually work our way into, now, that was stuff that I need to see energy pick up a bid, and then I'm going to start to look to build a position. The stocks I'm going to look at now are stocks that are actually in my game plan for this week and for today heading into Monday. So I'm going to go over to that list right now. So make that separation. If you write something down from today's video, tracking journal where you set alerts, trading game plan where we're looking to place those trades today. Okay. All right. So Pfizer is one that we mentioned before. So again, just to give you a very quick visual, Pfizer versus Peloton, obviously Pfizer has much better order flow. So sticking with Pfizer, now this is something you need to challenge yourself. You're like, okay, if Pfizer is holding the bid, that's the terminology we're looking for, where there's bullish order flow and it's holding the bid in the context for the market getting hit. What other stocks in that sector might also be strong if I'm looking to buy Pfizer today? So we're going to walk through a couple of those stocks right now. So remember, you got to think that through just one layer deeper, right? So if we're looking at Pfizer, then we're going to also look at Abbott Labs, which is right on the cusp of a breakout right now. We're going to look at BTNX, which is also showing push and a pause, a push and a pause. But I think what's even more interesting is the relative strength that the stock had on Thursday and Friday. But again, you need to know your news, which, by the way, something I want to talk about. I know we talk about it here, but I want to bring it up again because the comment that I'm about to make is something we don't talk about enough. When we teach people to do game planning in the boot camp, we talk about doing it in 2 steps. Number 1 is after the market opens, you still have all that price action fresh in your mind. You run your scans 7 o'clock at night. I say doing them on the 7s, which is 7 o'clock at night, and then you review it again 7 o'clock the next day. So we had some stocks in my game plan from last night. Now coming into today, overnight, things can change. Overnight, some news comes out. So BTNX, which is in my game plan coming into today, the news changed. So now I'm taking it out of the list. It's very important that you understand what you want to trade and then validate that prior to the market opening. So BTNX off of the Pfizer context, and you can see it's actually down right now. So that's going to leave the list. And then we have ABBV, which is another one that is resting right at a breakout level. Okay. We talked about Rivian before and the attention that Rivian is getting. We have been watching, and last week we discussed the breakout in XPEV. We also talked about 50 being the level that it needed to stay above. It did not stay above 50, so that was the end of that trade. Let's see. Dell and IBM. All right, let's take a look at those two. IBM, nope, not for me. Not for me. I don't see anything in IBM that would make me want to be buying this right now. The only thing that I'd be looking at right now is the possibility of, does it finally break this move to the downside? But again, here's the thing that I want to get across. I understand the idea. I understand looking at it. Again, I'm not telling you not to trade it. I'm telling you what I need to see. How much of an argument can I build for this stock to put my hard-earned money in the way? How much can I look at this stock and say, wow, somebody with really deep pockets is buying this thing and I want to join them? So if you choose to buy this stock right now, if you choose to believe that this is a good idea based on what we're looking at in the order flow here, based on reading the tape, here's the mindset that we talk a lot on this channel, and especially in a lot of detail in the bootcamp, is how long has smart money been allocating money to this idea? How much money could they have possibly allocated? And how does that translate into how you choose to piggyback off of what they're doing? So we started talking about position sizing. We talked about how I've reduced my activity, my position sizing dramatically, and that's on good ideas. So how would you look to allocate shares to this idea? Answer the question really quickly. How long has smart money been buying this stock? Well, they've been selling it for months. They've been selling it for the better part of 6 months at this point. How long have they been buying this stock? 1 day. 6 months of selling versus 1 day of buying. Wake yourself up right away and answer the question, is it a great idea for me to get involved in this right now? Probably not. Could you look to do something just based on the fact that there was buying on Friday? Maybe. But what kind of share size would it be? If you were in my office and we were discussing this right now and you came in and said, Pete, I want to have a conversation about buying IBM right now. Here's the reason, X, Y, Z, and all those things. You'd be like, all right, okay, maybe you made an argument, but if you're trading my capital, I would say that you'd go in there with maybe 20 to 25% of your intended position. That's it. That's how professional traders have conversations around accepting risk. Dell, probably a little bit different. Who brought this one up? Dell. Who brought this one up? I forgot. It doesn't matter. Richard Gresham. Okay, so Dell's a little bit different. Look at the difference in order flow in Dell right now compared to the order flow in IBM. Dell on a daily, weekly, and monthly basis. So this is the daily chart. Not only is it well bid from Friday, but it's also well bid on the weekly chart, and it is well bid on the monthly chart. So 3 different types of traders, daily, weekly, and monthly, are all holding higher lows and paying higher prices in Dell. Does that mean that Dell is definitely going up over the next week to 2 weeks? No, but it means that it's in much better shape than IBM right now. Again, get out of your mind being right or wrong. Trading is not about being right or wrong. Trading is about being right or wrong in your head, but not in the market's head. The market doesn't care if we're right or wrong. Trading is about probabilities over time. And if we're going to put our money in harm's way, we want to put it in harm's way when we think there's a good chance of it continuing to go in that direction. All right. So I actually like the Dell opportunity a little bit better than I would the IBM trade. So we're talking about that right now. That's how we'd be working our way through that on the higher time frame. So I want to go into a couple of more ideas here. Let's see. Al is asking about Lennar. Lennar actually did break out, right? Actually broke out last week. Let's actually go right into the chart. So This was a big level, right? 108, where the sellers kept coming in and shoving the stock back down. Now it traded into a bearish U-turn on Friday. So we're actually looking to see, we want this to go well bid again. With 1, 2, 3 candles well bid. For me right now, I like this idea. You can actually see really nice push and a pause, a push and a pause, a push and a pause. This deeper pullback with the market, but showing some decent relative strength. I think as long as it stays above 110, I'd be okay right now looking at Lennar. But I wanted to give you a couple of other ideas that are on the table for me today, specifically DLTR. DLTR actually exploded after earnings, and right now you can see that it's actually holding the bid. So DLTR is actually going to be towards the top of my list today of ideas I'm going to be looking at. A couple of other ones that have been strong recently that are big topics of conversation. AMD, which traded to new all-time highs, saw some selling last week and is trading a little bit lower again today. I want to see AMD get back above 150. So that's quite a distance away. So I'm not really ready to get back into that one. However, a couple of other ones that I do have on my list today, STX, showing a little bit of relative strength and closing above the open. A little bit lower opening today, but I still like last week's price action. Getting a bunch of questions about TTD. TTD actually, prior to the heavy selling last week, was actually near some pretty significant breakout levels. So I am looking for TTD to actually show some buying pressure today as well. Yes, Stephen, actually, Marvel actually is one of the stocks that I'm looking at today. So Marvel and NVIDIA. Let's actually hop over into both of those. So Marvel is actually an interesting one. Marvel did the exact opposite of what DocuSign did last week. Marvel actually gapped up, held the bid, closed below the open, but held pretty well. I actually like Marvel today. Now, the thing with Marvel, and this comes down to understanding how the stocks normally trade with liquidity. Marvel actually is one of those stocks where it's a good swing trading stock, but not a good day trading stock simply because of the daily liquidity. So I like Marvel. I'm looking for Marvel to hold the bid today, and I'd be looking to start to build a position into Marvel. That's a pretty big move on Friday, 17%. I think it was up 20% at one point. There's a good chance that Marvel's going to have to consolidate a little bit. So today would only be 1/3 to 1/2 of my position. Probably going to see the stock go sideways, maybe even pull back a little bit. And then during the next push, I'd be looking to start to get long again. NVIDIA is the last one that somebody had asked for. I still like NVIDIA as well. NVIDIA getting a ton of conversation around not only their core business, but now they're a big metaverse stock, which there's a big list of metaverse stocks out there right now. I still like this one. However, NVIDIA, as you can see here now, is well offered for 1, 2, 3, 4 days in a row. We need that to break. Remember what we said before about well bid and what we're looking at in the market and in individual stocks right now. Well bid means we need higher highs, higher lows, and closing near the high. That's 3 different pieces of price action that we need to see for NVIDIA. I do like NVIDIA, quite honestly. It's actually shown some really good order flow, and it has a good story behind it. So I'm going to be looking at some of the energy stocks today. I'm going to be looking at Rivian to possibly have a bottoming out today. I'm going to be looking at some of those healthcare stocks today, specifically Pfizer. And I'm going to see if some of those technology stocks, which were holding the market up for the better part, including NVIDIA and Microsoft, quite honestly. It's funny, Microsoft doesn't get the love that some of these other more, I guess, sexy technology stocks. But Microsoft is only 2 weeks off of all-time highs as well. A little bit of profit taking over the last couple of weeks. And now I'm actually looking for Microsoft to come back and hold that bid as well. So that's what we have today, everybody. We've got a lot of good ideas we're going to be looking at today. I'm going to be leaning toward looking for those energy stocks that were strong last week. I'm going to look for some of these tech stocks that were strong and healthcare stocks that have been strong. The only other area that I kind of like heading into this week, which is kind of more into the bearish mindset with what's kind of the safer ideas right now, consumer staples have actually been holding up. Stuff like retail stuff like Kohl's, Target, Walmart, Costco, Pepsi, Coke. Those kind of stocks have been showing a little bit of order flow when the market shows to be getting hit a little bit harder. So that's the list of stocks I have heading into today. If you're new to the channel, definitely come back every day, because the way that we work these game plan meetings here on social media is we kind of iterate the game plan. We kind of work the game plan as the week unfolds. So you could see a different list of stocks tomorrow than the ones that we talked today based on the price action. And that's how real trading works, is each day you're going in and reading the tape and reading the order flow. So if we had some If we did some volume, if we provided value for you today, please do me a favor, smash that like button. It would mean the world to me. And if you want to get updates, make sure you hit that subscribe button. Come back tomorrow morning, 7:30, and we'll reevaluate the game plan. But those are the list of stocks we're going to be watching today. All right. Have an awesome day, everybody. I'll speak to you soon. Thanks so much for joining me today.